Supply and demand POIs used to piss me off. I used to mark out a supply and it would get violated. I used to mark out a demand and it would get violated until I realized how to qualify them. Let me show you how to qualify them, but before I do that, follow me so you don't lose me. People are trying to impersonate me.
In order to qualify your point of interest, you have to understand these two things, right? A new market structure cycle and a new liquidity cycle. You have to be a big believer on these two things. If not, you're not going to get it. But now let's get into it. So look, this POI here, right? Why did I mark this one out? It's because this was a high, right? And we went and broke that high. So we have a new market structure cycle, right? Cool. Now let's get onto the liquidity bit. What did we have here? We had liquidity taken, tapping into this portion here. So liquidity, cycle, mitigation, right? And then push. New liquidity cycle established. But now that's not it. Let's go on the lower time frame. So if I go on a lower time frame, why did I pick that point specifically? Because if I didn't, I could have used this point here, right? This whole point here, because people tell you, oh, the last down candle before the up move. Yes, I could have used that. Then that happened here. That did not lead to a new high. One sec. That did not lead to a new high. How comes when we took that out, that led to a new high? You might be thinking, yeah, that's an inducement, blah, blah, blah. It's still in a POI. Yes. But why did I use this one here? Let's go on a lower time frame. So on a lower time frame now, there's one thing I'm looking for, one thing only. All right. I am looking for an imbalance before the last down candle before the up move. So where's the imbalance? For example, we have one here where the liquidity happened, right? We took out this low and then went up. Where was the imbalance? It was this portion here. The last down candle before the imbalance was right here, right? But you see how this has already been mitigated. Then from there, that's when we done this whole mazzoline, right? But if I look at this one, you see how that's not mitigated. So if I draw it down to this portion here, this last down candle before the up move with imbalance, let's go on the left. You see how this one didn't touch it, right? Cool, that's why we didn't make the high. But you see that, right? This one touched it. You know, come from touched it here, and then we touched it fully, and then that led to the higher high. And you might be thinking, no, it's a fluke. No, it's not. What do we have here? Look, a high that's taken, right? And we came and broke this low, right? New liquidity cycle, new market structure cycle. We have another one internally, but we didn't get a market structure cycle. But look, the theory still stands, right? But anyway, new liquidity cycle, new market structure cycle. What do we do? The last candle before the imbalance, what do we do? Mitigate. We consumed it a bit, but look, still led to a lot. Now here, we had this liquidity taken, right? New market structure cycle. So new liquidity cycle, new market structure cycle. Imbalance with an imbalance before the last, an imbalance after the last candle, up down candle. Look, it's right here, right? The candle before the imbalance is right there. Mitigated, new high, right? New high led to this high here. Okay, cool. Now from this high, remember this is where the last demand was. We came and broke that demand right here, right? Cool. Now let's look at it again. New liquidity cycle because we're taking this high. New market structure cycle, right? When we came in here, if I was to go on the lower time frame, again, look, last candle before the imbalance. You see that imbalance right there? What did price do? It came back up, mitigated it a bit. Remember, we're factoring the high as well. Mitigated it a bit, consumed it a bit, and then what did it do? Lead to a new lower down.
So the next time you mark out your supply and demand zones, just qualify them with these three things.